Hi there everyone, good morning and welcome to the market. I'm Avan Dabash, with me is Anisha Jain. Thanks for starting your day with us, and what you just saw was snapshots of the India Economic Conclave Day 1 that took place in New Delhi. Of course, today we'll be packed with a host of top corporate and global voices as well on Day 2 that we'll be getting you glimpses of through this day. But let's focus in then on the market setup this morning. And yesterday, well, perhaps unforgettable given the fact that we did find resistance around that 18,600 mark. Forget that, 18,500 as well wasn't really conquered with conviction in yesterday's trading day as we came off from the top of the day. And what was notable is that the frontliners clearly underperformed the broader market. So while we did manage to see at least the small cap index going home with a comfortable gain of 1%, it was the frontliners that took a bit of a backseat in yesterday's trading session. Financials, that was a key drag in yesterday's trade, and put your finger on a lot of those banking names. They did come under pressure in trade yesterday. So for instance, the like of a Kotak Bank shaved off 4% in trade, ICICI Bank under pressure, HDFC Bank, PNB, etc. And the Nifty Bank itself was down and out in trade yesterday. FIIs have been on a relentless buying streak, but we did see them yesterday snap their 8-day gaining streak. So out of the last 26 sessions, you have seen FIIs which have remained net buyers for the last 24 trading sessions. But just taking a look as well as to the kind of fund flow data that we've seen on a year-to-date basis, the FIIs have sold to the tune of about 17,000 crore rupees, and that really puts into perspective the day-to-day data as well that we have witnessed. But this morning, Anisha, what kind of global cues are we waking up to, and what's the outlook from the market experts?
Well, the cues are positive. Largely, the SGX Nifty is suggesting that because overnight we saw quite a bit of rally when it comes to the US market. Of course, the data was a bit mixed and the street is watching out for the jobs data, which is expected later today. But nonetheless, there was that positive momentum given the US Congress has voted positively on that debt ceiling limit bill, and now it's passed on to the Senate, which is expected to happen today. So a lot of positive momentum. Having said that, there were a couple of comments coming in from the Fed members, Harker as well as Jefferson, who said that there should be a skip at the next meeting, and that also supported the sentiment, and all of that meant that SGX Nifty is positive, and we saw a bit of a rebound as far as crude prices is concerned as well. But yes, talking about the big commentary coming in from the experts, well, Sensex at 1 lakh. That's the key commentary that we have been getting you right here at ET Now. We've been speaking with a whole host of market veterans, right from Mark Mobius, Chris Wood, Nilesh Shah, none other than Shankar Sharma, and the consensus view is that 1 lakh could be there on the Sensex very, very soon. In fact, Christopher Wood said that he would be disappointed if the Sensex does not touch the 1 lakh point 5 years from now. We also heard Mark Mobius saying that if a country is growing at 7%, it's not unimaginable that the corporates as well as the indices will grow at a rate of around 10 to 15%. And ditto coming in from Shankar Sharma as well. He says it's a matter of when and not if, pretty much, and that 1 lakh level could be coming on the Sensex soon. In fact, listen into some of those interesting bites coming in from the market veterans.
I'll give you a small example. We have heard about companies and their founders and promoters. Let me talk about a cooperative society, Amul. It is run by farmers, does not necessarily pay great salary to get good talent. In FY22, their turnover was 61,000 crore. This year, it is 72,000 crore. It is India's largest FMCG company. In their annual report, they have stated that in
All right, that's the view coming in, a consensus bullish stance from the top market experts. But let's also take cognizance of the economic indicators, because across the board, if you map it out, it has been nothing but upbeat. Let's start off with the auto sales numbers as well. That has continued on an uphill drive. You have most of the auto sales companies that have managed to beat estimates. The passenger vehicle sales have been strong. There's been sustained buying within SUVs, the marriage season, recovery in the rural markets as well, easing of the chip shortage, the reduced waiting periods for certain OEMs, etc. All of that has helped bolster the growth momentum in the month of June. So a lot of those auto majors, Maruti, M&M, Tata Motors, Hyundai, Kia, etc., they've all registered positive growth on a year-on-year basis. Moving on, that's not the only indicator. You also had the GST print then, and the revenue collection for the month of May stood at a healthy 1.5 lakh crores for the fifth time. That's registering a rise of about 12% on a year-on-year basis. Yes, we did see that record high collection of 1.8 lakh crores in the month of April, but this time around for the 14th consecutive month, you have a print of above 1.4 lakh crores. So that is fairly encouraging. And not just that, you've also got the manufacturing activity, which has remained robust, hitting a 31-month high in the month of May. There's been firm demand, improvement on supply chains, as well as an increase in new orders. So all of these factors, Anisha, have pushed up the overall economic indicator for India.
Oh, well, yes, and all of that is showing in the SGX Nifty for now, which is suggesting a good uptick of around 80 to 90 points and above the mark of 18,640 is what SGX Nifty is pointing out to. So maybe it's going to be a good Friday for the markets today. But it was a decent Friday for the crude prices as well. We had seen a sharp slip wherein crude had slipped to the lowest level since December 2021 on a closing basis when it hit the mark of around $72. Overnight, we did see a bit of a rebound. In fact, we have seen that there has been a gain of almost 2 to 4% as far as the oil prices are concerned. There has been progress which has been made on the US debt ceiling process. So that's something which is supporting the sentiment today, and that has managed to offset the worries which were there with respect to the increasing inventories in the US, at least temporarily. The other key thing that the commodities market is watching out for is, of course, the OPEC Plus meeting, which is lined up over the weekend. Large part of the street believes there might not be incremental production cut, but that seems to be factored in now. So that also is having a bit of an impact. Separately, if you look at the other details coming in, the Brent crude has risen to around $74 per barrel. The Texas Intermediate crude is standing at around $70 a barrel. So both the benchmarks recovered from session lows, and in fact, this is the single biggest gain that we have seen in crude prices in the last 2 weeks. So at least a bit of a rebound, and maybe the metals too will kind of bounce back today, given the fact we had seen quite a bit of weakness in the metal space throughout the week as well. But we're getting you the big voices right here on ET now from the biggest conclave of the year, and that's the India Economic Conclave, which is underway as we speak in Delhi. There we got the chance to speak with Ajay Piramal, the chairman at Piramal Group, and he believes that India is the best place to be right now. It's capital starved, but then there are a lot of levers to kind of grow towards it.
So, I was hearing the previous speakers, Mr. Agarwal and the others, as well as there is a lot of optimism in India, but I think, and I don't want to repeat that because we all know it. I think let's talk a little bit about the concerns that we have. The only reason why I'm saying so is that we want to grow faster because this is the best time India has had. If you look at it, if India has to grow at 8% GDP, which is what our aspiration is, if you want to go to a 5 trillion and then 10 trillion, generally in real terms, if it's 8%, then when you want the availability, credit must grow at approximately 18 to 20%. For credit to grow 18 to 20%, it has never happened in India. And I don't think we have today, we do not have banking or the NBFCs or anybody who can grow it that much. So we are capital starved, and therefore we have to work towards getting capital. There are many opportunities we can learn from what the rest of the world has done. So for instance, today in India, banks, or let's look at pension funds, provident funds, the ESIS, EPFO, all these are not allowed to invest in too many companies. With the regulations becoming tighter, better in India, I think we will have to open these funds available. Today, 50% of all these funds go into government securities. I think they must be allowed to be invested into companies. The second thing I find is that we need to get not only how do you raise funds today. A company does either from banks or from either you get public deposits or you can get bonds. Corporate bonds do not exist, so that's one area. equity markets, we do not have enough equity options. Look at what happens in, let's say, other countries. Look at Canada. All their pension funds, whether it's CDPQ, whether it's CPPIB, we know all these funds, whether it's the GIC in Singapore, they are the ones who are using funds which are of the public and investing it in countries and getting a good return for their own holders of the pensions. So I think we need to do that. The cost of capital in India is extremely high, and we are becoming very, very uncompetitive. And I don't think we can reach a 10% growth unless we open this up.
All right, that is Ajay Piramal talking about what exactly is needed in order to help bolster the sector and the economy. The SGX Nifty this morning indicating an uptick of about 0.5%, but let's find out what our chartists make of the market setup. Naresh Merani and Kunal Bothra joining in on the show. Good morning, gentlemen. And Kunal, going to begin with you. Yesterday, we put the brakes on that gaining streak, looking like we're finding a little bit of a hurdle crossing the 18,500 mark with conviction. What's your sense? Will we be able to cross it?
Good morning, Aman. So I think largely the action yesterday was restricted towards the expiry, especially in the last, I think, half an hour, last 1 hour, where we saw some selling coming across in the banking index, where it was down some 250, 300 points at the end. So I think it was more due to the expiry action, because there was no significant change in terms of data points. The internals of the banking index as well was a lot more mixed. That indicates that this was more to do with the adjustment of positions due to the weekly expiry. But net, I think even if you look at the markets over the last many days, we've seen that 18,400, which was the previous support for the Nifty, previous resistance for the Nifty, that is now acting as a support. Yes, we've retested the 18,500 mark, but we are still comfortably above 100 points above the major support. And assuming that the SGX 50 opens up with 75, 80 plus points, kind of a gap up, then we could be adding another cushion to the support for the index. So I believe the bias has to be on the bullish side. 18,400 remains to be a crucial support on the short-term basis. Until the time we trade above these levels, I think traders should look to hold on to their long positions and not worry too much about the intraday volatility on the indices.
Not worry too much about the intraday volatility on the indices. Is that a similar view coming in from you, Naresh, as well, that continue to maintain the positive stance at the index level?
Absolutely the same. So the view is similar. 18,400, 500 is now acting as a support. And now it becomes a buy on dips. We've seen a correction and a pause. And overall, we've started seeing good momentum across the world as well. So the trend is not just in India. We've started seeing momentum across the world. Now, in this case, the view is at 18,500, 18,600. We should get a pause around 18,800, 18,900. So we want to be buying on the dips for a better risk reward. And secondly, stocks look more interesting because that is where the momentum is. Yesterday, as well as in the last two sessions, we've seen the mid cap and the small cap indices outperform the Nifty. And that is going to be the case going forward. Unless we start seeing a huge participation in two heavies, which is basically Reliance and HDFC twins. Apart from that, we are not seeing strong momentum even in the Kotak Mahindra Bank or IT names in a big way. So overall, 40% of the index is still not trending in a, not in a similar stage, just like the Nifty is, which is 2% away from an all-time high. So once we get a recovery or a trend in these names, then maybe we could be looking at a much higher level. So overall, the view is positive. Buy on dips on both the Nifty as well as the Bank Nifty, and be more stock specific.
All right, so that's the view coming in on the Nifty and the Nifty Bank. But what about individual stock strategies? And Kunal, what looks good on the charts this Friday morning?
So two buy calls which I would want to suggest. One is Tata Communication, the stock which we discussed, I think, a week back when it was at 1220, 1230 levels. Very interesting chart. The stock has now crossed above the 1300 levels quite comfortably. I believe that the momentum is extremely strong. The chart patterns are very robust for Tata Communication. The stock has confirmed a breakout of the swing resistances as well as a confirmation of its 200-day moving average. All of that is extremely positive. Suggesting a buy, revised targets of 1380. Stop loss could be traded to 1300. And Oro Pharma is the other stock which I believe could probably be into a strong momentum zone over the next couple of days. My sense is that most of the pharma stocks are looking extremely attractive and they've got back into that momentum zinc for themselves. So Oro Pharma is what I would bet on from a short-term basis. 675 as target, stop loss at 645.
Momentum on Aurobindo Pharma as well as Tata Communication, and Kunal suggests you ride that momentum. Where are you seeing the momentum today, Naresh?
So looking at more mid caps and the out of the Nifty stocks, first is a buy on Bharat Forge. The stock has now started showing momentum in the last 3 sessions. A short-term trendline breakout above that 790 mark. Double bottom done at 760. Overall from 2018, 800, 850 has been a resistance. Tried to cross it one time before, again flipped back lower, and now seems like a new trend setting up, and the whole space is doing well. So out here, we've seen the mid caps and the small caps in a similar sector actually hit new all-time highs. Expecting Bharat Forge to also catch up. Expecting a target price of 900 in the short term, a stop loss at 770. Second is a buy on Mahindra and Mahindra Finance, stop loss at 280 and a target price of 340. If you look at the whole NBFC space, we've seen a good momentum in NBFC as well as MFIs. The first one in the NBFC space which really started outperforming was Mahindra and Mahindra Finance. The stock again came close to the previous 52-week high, so a flag breakout done here. So what we see is generally when a stock catches momentum and is the leader, the legs continue much higher than we expect. So expecting another leg up for Mahindra and Mahindra Finance.
Right, there you have it. Those are your top trading recommendations from our charters. But let's move on then. Is Sensex at 1 lakh a possibility soon? The biggest market veterans, as we said, believe so. This includes the likes of Chris Wood, Shankar Sharma, Nilesh Shah and Mark Mobius. Have a listen.
Now, that to me is very reasonable. Yeah, very. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
Market को predict करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much, much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Welcome back. Well, for now, the SGX Nifty is suggesting that it's going to be a decent start for our markets, at least above the mark of 18,600. So quite better than where we ended yesterday, which was below the mark of 18,500 at the Nifty level. And one sector which is expected to support this up move today is definitely the auto space, given the fact that the performance in the month gone by was much better than what Street was expecting. Let's go across to my colleague Shrishti, who's joining in with the internals.
Well, it has been a good month for all these auto OEMs, and definitely the numbers that we are getting to know are way above than what the Street was expecting in. And especially the outperformance is seen from the two-wheeler segment, wherein we have been highlighting to all our viewers that the marriage season is expected to boost the sales this time around for the two-wheeler segment. So that was something that we were watching closely, and all these companies have definitely outperformed the expectation. Firstly, let's start with the two-wheeler segment itself, wherein companies like TVS Motors as well as Bajaj Auto and even Eicher Motors Royal Enfield have shown an uptick of 6 to 8% on their sales figure when we compare the data on a month-on-month basis. But the key to note is that the export sales is now seen to be improving, and Bajaj Auto and TVS Motors has shown an improvement of 7% in their overseas business on a month-on-month basis. But let's talk about the passenger vehicle segment now. Herein also, the companies have performed better than what we were were expecting. From a case like Maruti Suzuki, sales of 1.8 lakhs of units, that's the highest when we compare the data in the past 30 odd months. That's a growth of 11%. And even M&M Automotive Division, as well as when we talk about Tata Motors, a bit of a disappointment coming in. But for both of these companies, it has been a flat growth on a sequential basis. In the commercial vehicle segment, a mixed bag, I would say, because Tata Motors has exceeded the expectation, but a mild disappointment from Eicher Motors VECV segment, and Ashok Leyland numbers this time were in line to the estimates. And talking about the tractor division, herein Escort has reported a healthy growth of 21% on a month-on-month basis, exceeding the street expectations. But for M&M, we are seeing that the sales was almost flat, but both these companies are highlighting a positive farm sentiment as of now. So all in all, a good set being reported by all these auto OEMs.
Thanks very much, Shrishti, for giving us that update on Motown sales. Moving on, Nifty heavyweight and leading NBFC Bajaj Finance met with Jefferies. My colleague Harsh is here to join in with the key takeaways. Harsh?
Right, Avan. So what we're seeing is, in fact, Jefferies opining that Rajiv Jain, who's the CEO at Bajaj Finance, made a refreshing presentation at the India Forum in front of them. What they suggested is Bajaj Finance, which currently drives around 50% of consumer loans in India, is looking at new verticals to be built over the next 10 years, and those will really unlock growth for them going forward. The new loan verticals are a balance between secured as well as unsecured, and profits and scale. So they're going to balance between all of those. They believe that digital platforms are going to help them and they aim to raise engagement on their digital platform. They believe that the view that they are taking is a 10-year view on all of these products and loans, and that will really drive the growth story for Bajaj Finance going forward. He also suggested that his age, which is currently 53 years, so relatively he's quite young, and he believes that he has a good amount of time going forward in various leadership roles within the Bajaj group as well as in Bajaj Finance. So he doesn't see an overhang with regard to leadership as well. So he's tried to quell down rumors on any leadership changes happening there, and he largely has tried to suggest that new products will drive growth for Bajaj Finance, and stability with regard to leadership is there.
Thank you so much for that important flash at the bottom of your screen, which should further fuel the rally in the global markets. That US Senate has cleared the debt deal to avert the default. So now it's pretty much a done deal. Yes, the presidential stamp is needed, but that's only a formality of sorts, because the only big hurdle was the Congress vote as well as the Senate vote. That seems to have cleared as far as that debt deal is concerned. So at least for the next 2 years, there won't be the overhang of a US debt ceiling anymore. So important commentary coming in, and maybe we'll see a bit of reaction in the Asian markets as well as the European markets and the US markets later as well. But coming back to the stock specific action that we are discussing, Aditya Birla Capital will be in focus today because they're looking at a raise of around 3,000 crores, and this will be by shares of around 1,025 crores, which will be issued to the promoters. Vamakshi is joining us with more details on the story.
Well, yes, AB Capital is in focus today. Now, earlier, if you remember, on May 11, 2023, the company had announced that the board of directors had approved a fundraise of almost around 3,000 crores. And in a follow-up to this, very recently, yesterday, the board of directors approved a preferential issue of almost 1,250 crores to its promoter as well as promoter group entity. And this is coming out of the total approved equity fundraise of almost 3,000 crores. This preferential issue is expected to be undertaken at a price of 165.1 per share, which when we compare it to the closing market price yesterday is actually coming in at a discount of almost 4%. Now let's look at the participation that will come in from the promoter as well as the promoter group entity. 1,000 odd crores are expected to come in from Grasim Industries, and 250 odd crores are expected to come in from Surya Kiran Investments, which happens to be a promoter group entity. Now it is also important to understand how these funds would actually be utilized. Now when the company had held a board meeting back in May, they had highlighted that the primary objective of support of this fundraise was to support growth both in the lending as well as the insurance business, and in fact a large part of this raise was expected to be deployed in the NBFC space, because the NBFC business for this company is actually a very important driver as far as the profit profitability for this counter is concerned. Apart from that, they also will be deploying a particular part of the capital for advancing its digital initiatives as well. So largely, it does look like the fundraise is coming in to support growth, and in fact, brokerages are also highlighting the same. When they had announced the 3,000 odd crores back in May, they believe that the capital raise is largely in line with what the street was expecting, as the strong growth in the lending business requires capital infusion. So all in all, on the back of this news flow, watch out for AB Capital.
Yeah, watching out for AB Capital, but also watching out for the promoter companies, Grasim, etc., because there was a note written this morning by one of the brokerages saying that the fund infusion was a bit unexpected, but given the balance sheet health of Grasim is much better than what it was earlier, it shouldn't be a big worry coming in that the company is putting in money into their subsidiaries and group companies. And remember, Grasim is also the update with respect to the launch of their paint website as well, so the stock will be in focus on account of that. But what will also be in focus is also Birlasoft. We had an analyst meet at Birlasoft wherein they came out with fresh commentary and on how the last couple of months have been, and more importantly how FY24 is likely to pan out. Listen into all of these details coming in from Sharad Dubey.
Well, in focus we are having Birlasoft, and as per report by InCred, there was a management meeting and they have stated that the overall demand environment still remains quite challenging, and that's actually impacting the delay in the decision making. And they also stated that the senior leadership restructuring, that process is also going very well. Apart from this, when it comes to the replacements of the hiring, there is a combination happening. One is of course via the external hires coming in at almost 30% while employee promotion is the maximum number coming in at almost 70%. Now the company itself has stated that they are focusing on the quality of business, especially on the higher accounts which are there, and also more incentives are coming ahead. And lastly, they have also mentioned there is a rationalization of clients happening for FY24, and they have also concluded the disengagement services for Invacare, which is actually on track. The process, when looking at the stock itself, the stock is up more than 37% and they delivered a strong Q4 numbers. However, there was a slight miss in the margins, and the deal momentum has been strong as stated by the management. But what are the key triggers for the stock going ahead? And of course, macros are expected to weigh in the short-term performances, but the management has stated that they are expecting a 15 to 16% growth in the operational margins going ahead, and they'll reiterate their guidance in Q4 as well. And also they're in the process to appoint the new COO as well as the Chief Growth Officer.
Thanks, Sharad, for bringing us all those details. But the focus is also on the consumption basket, and the chatter continues whether the recovery in the rural market is ongoing. Is it a bit sluggish, or what's the status of that? Well, JP Morgan met with the management of HUL as well as Colgate. Listen into the latest commentary coming in. We have Vinny joining us with all those details. Vinny.
In terms of the commentary that we have seen, especially let's just talk about the rural, HUL, what they are highlighting, rural demand seems to have bottomed out now, and we'll start seeing a sequential recovery and improvement which is underway already for the company. In terms of pricing and volume growth also, there was a lot of pricing action that was taken in the past also by HUL. Now they believe that the pricing growth will taper off and we'll start seeing volume growth coming back as well, and a recovery especially that will be more gradual and more back end as well. Other than that, in terms of segment performances, laundry outperformance, which we have seen continuing for a long time. Now that will actually start normalizing in FY24. Given that premium category, we are seeing a normalization coming in on that front. Skincare category, revenue momentum will continue improving sequentially. HFD, that stiff milk competition, is something that could still impact and could be a near-term concern in the HFD segment. That's the health food drink segment. Keeping an eye out on that one. While gross margins obviously will start seeing an improvement sequentially, but let's not forget the company is highlighting that the ad spends, that they will continue to make more and more investments on that front as well, and also increase their A&P spends as well. Moving on to Colgate as well, similar trends what they are highlighting in terms of an improvement in the urban market, especially for the oral care segment, as well as green shoots that they're seeing coming in for the rural market as well. Premiumization opportunity is quite significant for Colgate, especially it will be a key growth driver in terms of the long-term growth for the company. Revenue for the organized players organized retailers has now increased to the salience has increased to 25% now, so that is always going to be benefiting Colgate as well, and they too are going to be saying that they have been increasing their ad spends as well, and that could be something that could keep the EBITDA margins a bit subdued in trade going forward as well. Obviously, they're committed to more diversification in their portfolio as well. So that's the highlight coming in from the consumption space in terms of overall ad spends as well as the rural and the urban demand trends.
For putting that into perspective, so at least the commentary coming in from HUL suggests that the rural, economy has bottomed out and there's going to be a growth, at least on a sequential basis. That's a key headline for me. But the headline is also coming in from the latest greed and fear note coming in from Chris Wood, wherein there has been a fresh addition. They have made the, investment in AU Small Finance Bank, and that's coming with a weightage of almost 3%. They've added the weightage to financials as in Nifty banks and financials as well. And overall, their, exposure to the banking space in the BFSI vertical in India has increased substantially. What they have removed from the portfolio is scams. So they are talking about how mutual fund industry is facing regulatory headwinds, which if implemented will increasingly damage the profits of what is a clear success story. So on account of that, CAMS has been put out of the long only portfolio, and you have AU Small Finance Bank, which has been added with a 3% weightage. So watch out for those counters in the trading session today. Shifting focus to the real estate pack, because that's been seeing quite a bit of buying momentum of late, but is it likely to build on gains? How was the month of May for the property sector? Let's go across to Amakshi to get those details.
Well, yes, when we look at the real estate property registrations for the month of May, the number of housing units that have been registered in Mumbai did see a dip of almost 7% on a month-on-month basis, but have largely remained flat on a year-on-year basis, coming in at 9,823 units. Now, despite this decline that we're seeing, is still the second best of May performance in a decade after May 2022. Now, as compared to May 22, we did see a flat growth on a year-on-year basis, and registrations were in fact down by only 15 units on a year-on-year basis. But overall, the value of units registered did see a decline of 7% month-on-month, but it has gone up by almost 15% on a year-on-year basis at around 13,900 crores. Not just that, the average ticket size has also seen an improvement of almost 15%, standing at around 1.4 odd crores, which in turn is indicating that the higher ticket home sales have actually fared better. And in fact, this can be evidenced by the fact that the share of the units that are larger than 1,000 square feet have increased from 18% in May 2022 to around 24% in May this time around. Meanwhile, registrations in Maharashtra as a whole have stood at 1,48,355 units, which is an uptick of almost 12% coming in on a month-on-month basis, and even a 9% uptick on a year-on-year basis, which is in fact a very healthy uptick. Registrations in Delhi have also edged up by almost 10% month-on-month. However, they have remained largely flat on a year-on-year basis, standing at 11,478 units. So all in all, Novama believes that Mumbai-based organized developers such as Macrotech developers, Oberoi Realty, Godrej Properties as well as Suntech would benefit from a revival of the housing sales that we're seeing in Mumbai. So largely on the back of this news flow, watch out for all the realty counters.
All right, we certainly will, but let's bring on board Sandeep Savarwal in the meantime and discuss the market outlook. Sandeep, hi there, morning. We quizzed our experts as to whether or not we can see the Sensex at 1 lakh within a few years from now, and everyone said a resounding yes. What's your view?
It has to amount, but ultimately, like the GDP keeps on growing. So, if the GDP keeps on growing, then Sensex will obviously reach that level. When is the question mark, and that is tough to predict.
Coming in as far as the Sensex at 1 lakh is concerned, matter of when and not if. But Sandeep, what about the entire paint stocks? Because we have seen a lot of competition today. Of course, Grasim is going to be in focus because they have launched their sparkle painting services as well. Do you expect the incumbents, the likes of Berger, Asian Paints, to manage to maintain their market share, or do you see a big threat coming in from the new players?
So there'll be a big threat simply because of the fact that paints is a very high margin business. If you look at the operating margins of Asian Paints, which is the market leader, they are so high that it makes sense for a disruptor to come in, price lower and still make healthy margins. So Grasim, even if it prices, let's say 10% lower than Asian Paints, still it will make double team kind of margins, which is very good in a paints kind of business, which is not so capex intensive in terms of the asset turnover. So there will definitely be disruption. There will be price war of sorts in the short run as the incumbents try to maintain their market share. We've already seen a few other players enter, but slowly, like JSW Paints entered, JK Cement has announced. We've seen some small players like Estel and all coming, but they are relatively smaller players. Grasim is investing at 10,000 crores for this entry, so I think they'll come in with a big bang. and it will definitely disrupt. So I think we've seen a good rally in paint stocks from the bottom as the results were decent and input prices have been subdued. But for those who are already invested, I think they should be trimming holdings. New buyers should not be buying this sector at this stage.
Okay, fair enough. That's the view coming in on the entire paint sector, and we'll be closely watching out for Grasim in particular in trade. Sorry about that, Sandeep. Remember, I mean, you've been bullish on the entire hospitality space, and you know, we have seen most of the companies deliver a pretty strong set of numbers due to the very healthy rebound in travel. Do you think that this momentum of healthy occupancy growth, etc., will sustain, and just revisit some of the stocks that you remain bullish on?
Yeah, I think it should sustain simply because of the fact that a large part of the initial move was driven by domestic tourism. Now, foreign tourism and business travel has started to complement that, and that will add to continued performance. So I think I still believe that one good thing which many of these companies did during COVID was to look at their costs, reduce costs, and focus on profitability. And once demand is coming back, that's impacting their profitability even more significantly on the upside. So I believe this entire sector will continue to do well. I think we have at least 2-3 years more of strong performance ahead of it before possibly we could see more supply coming in and impacting the average real revenue growth, etc. But as of now, there doesn't seem to be any concern.
Now, what we're going to be perhaps bringing out for our viewers, and this is a series of conversations which we've had with Chris Wood, Nilesh Shah, Shankar, Mark Mobius, that when will the Sensex touch 100,000? And that's a point which I'm going to ask Sandeep also. Sandeep, do you think in next 4.5 to 5 years, Sensex could touch 1 lakh? If yes, why? If no, why not?
If yes, answer is very simple because even if GDP grows at 7% and we have a 4% average inflation, we will have maybe more than that. Just a 11-12% compounding will take Sensex above 1 lakh. Now, on top of that, you have potential gains from productivity improvements, potential gains from higher growth and improvement in profitability, and new sectors coming in which could add to the overall growth in the market. So I think for an economy like India, it's a given. Now, will it happen in 5 years? My guess would be yes, it should happen in 5 years.
So I just want to talk a little bit long term for the benefit of our viewers. You know, while we can talk about X, Y, valuations, problems in the world, what's happening to the US debt ceiling, what will happen to the general election cycle, how things are moving in terms of the rural economy. The bottom line here is that historically, Indian markets have multiplied in the range of about 12 to 14%. And we are in a much better shape in terms of progress, our indicators, our debt to GDP ratio, and our control on inflation. If the economy multiplies at historical run rate, which is, like Sandeep just mentioned, a 12 to 13% compounding from here is not a probability but a possibility. So if you do a maths on this, it is entirely conceivable that in next 4 to 5 years, maybe sooner, maybe later, but in and around next 4 to 5 years, Indian markets or the Sensex can easily touch 1 lakh. Naresh Mirani, long-term charts, I mean 5 years could be a stretch to talk about right now, but do you see the potential of Sensex touching 1 lakh?
When you were asking the question to Sandeep, I was just putting a simple CAGR. It's very simple. Say if you look at current Sensex prices, 5-year return towards 1 lakh would be closer to 10% CAGR. And that should be our minimum expectation from Indian markets over a 5-year, 8-year cycle. So overall, the view is we are setting up for that number. We could surprise on the upside rather than on the downside, unless something changes in the world out of nowhere. And if we look at the price action, this is how the cycles have been. We get into a bull market, consolidation market. So after 2015, we went to a phase of 9,000 to 7,000. The next time we moved up about 9,000, we went up 20-25%. Now in 2021 to 2023, we've gone from 18,800 to 15,000, a similar 20% plus correction. We've spent a year and a half. The next time we go about 19,000 over a period of time, we should go up another 20%. So same thing moves up from 60 to become 75 as such over the next a year and a half if that breakout plays. So technically, we are setting up for a fresh breakout into all-time highs. So the next 1.5 year does look promising, and over a 5-year period to expect 10% CAGR should not be a bad number.
Okay, I'm going to shift gears and talk about a stock which Kunal has been perhaps advising our viewers almost on a daily basis. Just like Nuresh has been advising our viewers to buy Indian hotels from last 2 years, Kunal has been advocating his clients and advising our viewers to buy into Tatacom. And Kunal, it's been a good call. Irrespective of what is happening to the IT space, Tatacom has moved on a different planet.
Well, yes, Nikuj, and in fact, I think the best is still not happened for Tata Communications, at least over the last 2 or 3 months. There have been very strong, consistent patterns of a strong uptick for Tata Communications that's been complemented by very strong volumes for the stock, a breakout on indicators. Then all of a sudden, you see a stock getting into a mild reversal, going into a profit booking mode, remaining quiet for few weeks, and then gearing up for second round of breakout on the upside. So we've seen that pattern consistently for Tata Communication. This generally happens when the stock comes out of extreme negativity and is still trying to find its feet in terms of a strong follow-through uptrend. My belief is that Tata Communication should at least cross back about the 1400, 1450 mark, possibly in the next 1 or 2 months, just plainly looking at the last 2 or 3 months of chart pattern. So I believe that the best is still not happened for Tata Communication, and there could be still more upside for the stock, at least over the very near term.
Sandeep, back to markets, and it's been a 10% plus uptick for the Nifty from the low. It's been a 12-13%, more than 10% uptick for the Bank Nifty. How are you using the gain to your advantage to lock some gains? I mean, you also have a tactical approach, which I've seen over the years, where you want to time the market for some near-term gains.
That's true, but I'm not bearish at this stage. I think people have been very bearish in March itself, which is less than 2 months ago. People were so bearish that many were predicting 14-15,000 for the Nifty. So I don't think that the pessimism cycle has played out. And on top of that, we have to tactically also evaluate the global funds flow picture. Many people who flocked into China thinking that there is going to be huge revival and valuations are cheap have many foreign investors have started to realize that China is in a deeper rut. It's very tough for them to revive the economy by any significant extent. And India is the absolute opposite side. Look at the financial sector in India and financial sector in China. They have zombie banks, they have local governments facing so many debt issues, etc. Their real estate is in a mess. India is on a total flip side. Indian PSU banks made 1 lakh crores of profits last year from having to rely on bailouts from the government 5-6 years back. The situation is totally different, and I don't think it's time to be negative at this stage. Valuations, obviously, at some stage will become excessive. At that time, we'll take out some cash off the books and hold some cash. But I think it should be still somewhere.
About, but of course we have the 2-day spectacular event underway in New Delhi, that's India Economic Conclave, and Vedanta Resources founder and chairman Anil Agarwal spoke, saying that India is determined to make semiconductors and the world does not want India to become self-sufficient in developing electronics. Let's listen in.
It's very important. इलेक्ट्रॉनिक जो है, आज दुनिया नहीं चाहती है कि हिंदुस्तान रिसोर्स डेवलप करे, इंपोर्ट बेस रहे और हिंदुस्तान इलेक्ट्रॉनिक डेवलप करे। वो क्या बोलती है कि आप स्मार्टफोन बना लो, आप लैपटॉप बना लो, लेकिन चिप्स आप हमसे खरीदो। ये कैसे हो सकता है? ये कैसे हो सकता है? हम सेमीकंडक्टर बनाएंगे, हमने कफन बांध रखा है सिर पे, हम ग्लास बनाएंगे, हम जो यंगस्टर को 3-4 चीजें चाहिए। अगर 15 साल के बच्चे को अगर लैपटॉप मिल गया, वो जॉब खोज लेगा। वो जमाना चला गया जब वकील बनना है, इंजीनियर बनना है, मार पीट करके बच्चों को तैयार करते थे कि आपको डॉक्टर बनना है। नाउ इज ए लिबरल आर्ट्स टाइम. He has a quality, he has something skill, and he can only find out if he has a laptop. And laptop has to be available as very, very affordable price at 25 to 30,000 rupees. A smartphone has to be available. He has to have a scooty at very, very reasonable price. These three things you have to provide to the 15 years old boys. And this we will provide.
That's the commentary coming in from Anil Agarwal of Vedanta, quite bullish on the opportunity that is available for semiconductor manufacturing back home in India as well. But Sandeep, apart from the semiconductor manufacturing opportunity, the entire opportunity seems to be in the electronics manufacturing as well, a vertical integration of that, if I may. Dixon, Amber, Sirma, SGS, Keynes, etc. We have been talking about these stocks, but is there any name that you would want to pick as a top bet which hasn't run up quite a bit? Valuations look okay?
You already named the larger players. Now the issue with this business is that one, it's contract manufacturing, so it relies on what the OEMs want. Secondly, it's a very, very low margin business. Thirdly, the valuations of these stocks are so high that I don't see any value in them at this stage. A contract manufacturing company cannot trade at 70, 80 price earning ratio, which normal branded companies also don't do. I believe the valuations of these companies are totally distorted. If they come to reasonable levels, we might still look at it, but I wouldn't look at it at this prices.
Okay. I go back to Reliance. Why is Reliance not moving higher? Sandeep, why is Reliance not moving higher? It's getting quite frustrating for a lot of market watchers that nearing an all-time high on the Nifty, Reliance, HDFC Bank, Infosys, the three horsemen in the market are completely on the sidelines. Sandeep?
So Reliance has done something in the near term, but nothing compared to what it did in 2020. Last 3 years have been in consolidation. And one of the major reasons why it's not performed is that it made a promise to investors of going zero net debt. And when we look at the balance sheet now, we still see a net debt of 2 lakh crores and still growing with their new age energy plans. So I think that will keep the valuations down. That said, after such huge period of underperformance and earnings growth, the valuations are now much more reasonable. And to that extent, the possibility that the stock has an upside of 10-15% here from here is extremely great, given the fact that the retail profitability would be bottoming out from the telecom side. Things could incrementally improve. The oil and gas and the O2C business might do better going forward. So things are falling into place in across their businesses, although moderately, and that reduces downside risk and provides some upside.
Okay. Let's talk IT. Nuresh, in a bull market, sectors do not underperform for long. Do you think IT is nearing its end of decline? If yes, which IT stock do you mind could give a tactical jump?
Started seeing a lot of momentum in the small cap and the mid cap space. You can pick up names from a Saxoft to a Persistent to a Sonata to a KPIT Tech. So we've seen the mid cap IT do well, and the only ones which are in pain are the very large ones like Infosys and TCS, which have not done well, Tech Mahindra, which has not done well. Even HCL Tech has started making a breakout move. The stock is the best looking chart in the larger IT space. So HCL Tech could be the first one which could actually surprise on the upside. I would expect it to go towards 1250 to 1350 also. And that would be a move towards the previous all-time highs. So HCL Tech is a tactical bet. Another bet is Tech Mahindra, which has now started basing out. The stock has gone through a sideways period for the last 1 year, but is coming back to that resistance of 1150, 1180. If that breaks out, that could be the second one. Then LTI Mindtree is the one which is in the mid-cap space, which is shaping up for a breakout over that 5,000 mark. So we are seeing technical confirmations in some of the names. HCL Tech looks the most interesting one as of now, but on Tech Mahindra and LTI Mindtree would be the next. Not as convinced on the large names like Infosys, TCS, or Wipro, but would focus beyond these three names. We've started seeing stock-specific action across the board. A sleepy company like Nucleus Software went up 50-60% over the last week or so. So what we are seeing is selective moves across the mid-cap and the small-cap IT space, and now it could get selective in the larger mid-cap or the large-cap IT space. Would forget the heavies, focus on the rest.
We're talking about IT. Just wanted to flag out that Infosys will be in focus today. It goes ex-dividend, so there'll be an adjustment of 15 rupees there. So we might see a bit of a temporary blip as far as Infosys goes. But Sandeep, wanted to check, do you track AU Small Finance Bank? Because that stock has been scaling fresh record highs. And today, of course, Chris Wood has added it to his long-only portfolio in the greed and fear note. What's your sense on AU Small Finance Bank? Should one buy it even if they have missed out on the rally so far?
No, actually, my view is somewhat different. I do not buy into smaller banks which are going too aggressively. We have seen the pitfalls of that across the board, across banks in the past. And I don't think any bank has such systems which will make it immune to NPA issues, etc., balance sheet issues if it grows more than 2 times that of the overall banking industry, especially once you have reached a particular size. So I would remain cautious on such banks. It's rallied a lot. It has fell also, and then it's rallied quite a bit. But I don't buy into these banks now.
But Sandeep, to be fair, the NPA cycle is still not there, and these banks are growing because they have a small base, and B, because the credit cycle itself is looking strong. So the fact that they're growing, is that the only criteria you will not buy a small cap bank?
Yeah, because they don't have a cost of fund advantage, and then on top of that, they grow very aggressively. So it looks very good in a good cycle when rate cycle is benign, economy is doing well, and then suddenly they get into issues, and those issues turn into sort of vicious cycles. So we have seen that in the past. So see, our return expectations are moderate. So we are not looking at buying into multi-baggers in every sector. Financials is one sector where we need to have a more cautious approach. We can be more aggressive in other sectors.
You know, I always share this point with our viewers that financials, they are owned and they are over-owned by institutional investors. But remember, ultimately in financials, you are running a balance sheet which is a leverage balance sheet. The best of the bank in India, and I'm using HDFC Bank as an example, their return is, the ROA is not even, ROE is not even more than 20%. And there are a lot of companies which do not take that leverage risk, and the return ratios are far greater. So when you are looking at analyzing the market from an institutional standpoint, you know, they have to hug the Nifty, they have to beat the benchmark, but they cannot deviate too much away from the benchmark. And that's where most of the funds, both global and local, have a preferred weightage towards financials. I mean, financials are doing well. As a cycle, it's doing very well. But ultimately, when the economy reverses, and which is the risk what Sandeep flagged off for some of the small banks, you know, the risk of some of these banks reversing actually, or financials reversing actually, could be extremely high. Kunal, a stock which we discussed last Friday, and it was almost like a slam dunk, Page Industries. Has Page Industries bottomed out?
Well, not really, Nikunj. I think the stock has just gone through a recovery post the sell-off. I think from 36,500, 37,000 of closing, I think on Thursday previous week, the stock has recovered to 39,000, but it's not closed that gap which had been created on that single day of sharp gap down. That I think the upper end of the gap is still at 41,000 for Page Industries, and you know, when I look at the charts, it's the recent volume setup for Page Industries still indicates that this is more to do with a sell on rallies rather than a buy on dips for Page Industries. I believe even if the stock possibly comes back to that 40,000, 40,000, 41,000 mark, it could actually be an indication of trying to cut short more positions rather than building off more long positions. So I would not be too much enthused by this recent rally for Page Industries post that sharp sell-off, and I would probably consider this to be a sell-on rallies candidate. My sense is that once the stock goes into a double bottom formation at the 36,000 mark, that could be a real indication of a near-term bottom in place. So as of now, avoid.
As of now, an avoid coming in as far as Page Industries is concerned, but it's not at all an avoid when it comes to the Indian markets, whether it's Mark Mobius or Chris Wood. All of them are saying that we are just at the cusp of a long-term bull rally when it comes to India, and that bull rally can take the Sensex all the way to 1 lakh mark. Listen in to the comments coming in from the biggest market voices.
Yeah, that to me is very reasonable. Yeah, very. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
Market को predict करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much, much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Okay. Kunal, we've not discussed Adani group of stocks. They were the comeback boys, the comeback group, at least in late May. Could April be another sparkling month could June be another sparkling month for Adani stocks?
Well, it could be, Nikunj. In fact, for Adani Enterprise specifically, I think if I can call it so, the highest beta stock from the Adani, pack, I think that stock has done reasonably well in the last 1 or 2 weeks, from 1800 levels towards 2700, 750 mark, where the stock tested. So almost like a 1,000-point rally for Adani Enterprise. And post that rally, we've not seen the stock going into a V-shaped correction. It's in fact gone into a sideways correction over the last 4-5 days after that rally for Adani Enterprise. So that itself indicates that this is more to do with a time-wise consolidation rather than more of a price-wise correction for Adani Enterprise. And generally, when stocks rally up 1,000 odd points or 8 to 10%, we expect the stock to get into at least a couple of weeks of time-wise correction before they get ready for a breakout on the upside. So is the case with the other names. I think Ambuja Cement, for example, the stock had done exceptionally well from 350, 360 levels to 440 or 445, which was the high for Ambuja Cements. And from there, it's corrected back towards 430 levels. So a very mild correction, a strong uptick from Ambuja Cements. Same is the case with the Adani Port. So I would believe that there should be more upside left for many of the Adani group of stocks, specifically the two names which have been as well as Ambuja. They are the ones which are looking more solid, as well as very low to moderate beta kind of stocks.
Sandeep, some of our common friends are telling me that finally you've changed your view on consumer tech and fintech stocks and you're looking at adding some names in your portfolio. Are the rumors in Delhi right? This time it's not a Bombay rumor, it's a Delhi rumor.
Delhi rumors are always wrong.
So you don't buy consumer stocks. You're not going to buy fintech and consumer tech, even though a lot of the companies are now defining and redefining the path to profitability, whether it is, PB Fintech or Zomato or Paytm.
I'd rather buy those consumer stocks which are already making profits and which will see a revival. See, I'm not looking at making 100% returns. I want steady returns. So I think steady returns will be provided by consumer stocks which are currently beaten down and suffering from lower consumer demand. So I think there are companies now exactly at these prices whether we should buy or not. I'm not sure, but offhand, like companies like Voltas, Havels, something like a Dabur, Bata, all of these stocks are relatively down. And once consumer demand revives, many of these established companies will do well. The consumer fintech companies have a lot of issues. Their valuations are not cheap. Whoever thinks their valuations are cheap, I think doesn't know how to do valuations.
All right, clearly it seems like the rumor mills are wrong, and Sandeep continues to stick to that view when it comes to new age tech. That, by the way, is the pre-open ticks on your screen around the 18,560 mark, and for the Sensex, we're up about 90 odd points. Let's find out what those mid-cap strategies are from our chartist. Kunal?
Well, I'll bet with another pharma name. So Glenmark Pharma is something which I would recommend as a buy, something which I've been recommending earlier as well. I think it looks very interesting now as a setup. After a week or 10 days of consolidation, the stock seems to be ready for another round of up move. So buy with a target of 640 for Glenmark Pharma. Stop loss for this trade, 597.
To remain bullish on pharma, it's Glenmark that's on Kunal's radar. Naresh, what's your pick?
So that would be a buy on Industars. The stock has seen good volumes in the last two sessions. A double bottom done here. 160 is the breakout point. Came close to it yesterday as well. Expecting it to catch momentum, go towards 180, a quick short-term move. Stop loss at 152.
Those are the top bets coming in. Industar was something that Naresh continues to like. But shifting focus to get you the headlines, what's happening across the globe as well. In our News Fatafat segment, Australia-listed investment firm GQG Partners has now gone ahead and increased their exposure in chipmaker Nvidia. Yes, this is the same company that briefly joined the likes of Apple, Alphabet and Microsoft in the $1 trillion market cap club. GQG increases exposure, citing increased likelihood of the company benefiting from the investments that we are seeing in the world of artificial intelligence. Meantime, laptop maker Dell reported better than expected first quarter results, even as macro challenges weighed on computer and laptop demand across geographies. A beat on the bottom line came even as margins and revenue fell amid a weaker backdrop for the PC demand. Financial giant JP Morgan Chase will be shutting down 21 branches of First Republic Bank, and by the end of this year, as the bank integrates the failed lender into its own operations. The location accounts for about a quarter of First Republic's 84 branches across the United States. About 100 employees who are impacted by these branch closures will be offered 6-month transition assignments. Also watching out for what's happening in the Eurozone, because inflation in the Eurozone eased more than expected in the month of May. Headline inflation in the region fell from 6.1% from the earlier 7% reading that we had seen in the month of April. This, remember, is the lowest level since February of 2022. What's left to see whether the ECB continues to hike rates aggressively. Street is, however, expecting at least 2 more rate hikes in its upcoming meetings, and similar commentary was heard from ECB's Christine Lagarde as well, who did not give any indication whether there's a pause coming in, at least that region.
All right, moving on. The Sri Lankan Central Bank has slashed their key policy rates by 250 basis points. This is the first time in 3 years that they've cut rates, largely alluding to a rebound in the economy that was under crisis. The South Asian island republic plunged into crisis last year as forex reserves ran out and food and energy prices spiraled. Meantime, Boeing has delayed the first crewed launch of the Starliner spacecraft, and the decision comes after additional issues with the capsule were discovered. They discovered 2 new problems with the Starliner impacting safety standards. And UPI transactions have surged 58% on year. This is the highest volume and value ever recorded in the month of May. Data shows over 9 billion transactions conducted, amounting to a whopping 14 lakh crores. And West Bengal continues to swelter. The IMD has issued a heat wave warning till the 7th of June, flagging off the impact of the dry westerly winds, which will be seen across most of the district.